This week we're going to have the first Fed policy meeting after Liberation Day from Trump, and also on Thursday we have the BOE interest rate decision, and we had also some interesting reaction in oil prices after OPEC Plus increased output. Hello everyone and welcome back to this weekly technical outlook, and we're going to have a start with the dollar yen that it had some interesting movement to the downside, that it found strong support near the 23.6% Fibonacci retracement level at 144.35 of the down leg from 148.86 to the lows you want at 139.85. So if there are further reductions, the market it may test the 3-day SMA near the 143.35 region and even lower the 142 round number. Now moving further to the downside, the price it may test the 7-month low at 139.85 and even lower the 200 weekly SMA at 138.30 lies here. And I will switch now to the weekly chart to check that the 200 weekly SMA is near this area. Even lower, the trough from July of 2023 also holds at 137.20. Now to the upside, if there is a rebound of this area here, the price it may retest the 145.90 level, which was the previous peak, and even higher the 50-day SMA, which overlaps with this descending trend line in the medium term at 146.65. Now to have a clear upside tendency, we have to wait to see a break above the 50% Fibo at 149.40 and the 200-day SMA at 149.60. Turning to the technical oscillators, the MACD is moving above its trigger line but is still below the zero area. However, the RSI is pointing down and it crossed its 50 region to the downside. Now switching to GBPUSD, that we have the BOE interest rate decision, which is expected to cut rates by 25 basis points. We can see that after the bearish doji candle that it posted on Friday, the price is recouping some losses, with the first resistance coming from the 3-year high at 134.43. To the upside, the upper Bollinger Band around the 1.3570 area is coming next, ahead of the February of 2022 high at 1.3635. Now, if this pattern proves to be unsuccessful, the price it may rest near the mid-level of the Bollinger Band at 1.3208, ahead of the 1.31 psychological number, and even lower the 50-day SMA at 1.3030. A drop beneath this ascending trend line, and more importantly below the 200-day SMA, then the price at 1.2846, then the price it may move toward the next support at 1.2715. The technical oscillators are suggesting more losses in the market. The MACD is holding beneath its trigger line but is still above the zero area, and also the stochastic is still holds beneath the 20 level. And now moving to oil prices, that we had a bearish gap today. The price it dropped towards the 55.40 area and is recapping some of this gap, but there is also some room to cover until the price it may come back to the previous levels around the 58.55. Now if the price moves higher, then the first resistance is coming from the 20-day SMA at 60.80, and even higher, this resistance is taken from this inside swing low at 61.50, ahead of the 50-day SMA and the 65 round number, which proves to be a tough obstacle for traders. Now to the downside, the price it may retest the 4-year low at 54.70, ahead of the 54 round number, which is the 61.8% Fibonacci retracement level of the up leg of the monthly chart, from the low at 6.60 and the peak at 130.50. Now the technical oscillators here are also pointing to the downside. The RSI is holding near the oversold region, and the MACD is extending its negative momentum below its trigger and zero line. So we have to wait to see if the market will recap this gap or if it continues to the downside. So that's all from me. Thank you for watching. Have a great day.